Good morning, everyone, and welcome to the Australian Banking Association information session, AML CTF Reform in Focus. My name is Bradley Brown, and I'm the National Manager for Regulatory Operations at AUSTRAC. I would like to begin today by acknowledging the traditional owners of the lands on which we meet. Today, I'm joining you from the land of the Gadigal people of the Eora Nation. I pay my respects to elders past and present, and extend that respect to Aboriginal and Torres Strait Islander persons that are attending this event. It is a pleasure to be providing the opening remarks today ahead of the main event, fireside chat involving the Honourable Simon Birmingham, CEO of the Australian Banking Association, and our very own Katie Miller, Deputy CEO of Regulation at AUSTRAC. I want to start by thanking everyone who has joined this session for the work that you do each and every day. Whether you're involved in customer identification, reviewing transaction activity, filing suspicious matter reports, or supporting frontline decisions, your work directly protects the Australian community from serious and organised crime. Now, I'm going to begin by touching briefly on the money laundering environment in Australia, our very fast approaching reforms, our regulatory priorities, and just give a couple of cases illustrating the essential role that banks play in disrupting money laundering in Australia. So last November, the Australian Institute of Criminology released its latest report on the costs of serious and organised crime in Australia, assessing that serious and organised crime costs Australia up to $82.3 billion annually. It's around 3.2% of our GDP. Now, if we think that figure is significant, globally, illicit finance is estimated at $2 trillion. We know in Australia that the domestic drug market alone is worth at least $19 billion each and every year. That's $19 billion of illegal profits that criminals launder through the financial system, including banks. This is just one crime type. These numbers show the scale of the threat, but they also show why your work matters. Your decisions, your judgment, your willingness to raise a suspicion, they are often the first point of identification of criminal funds entering our financial system. Now, tomorrow marks a significant milestone for our fight against financial crime, with changes to Australia's AML CTF obligations for current reporting entities, and obviously later this year for Tranche 2 entities. In November 2024, the Anti-Money Laundering and Counter-Terrorism Financing Amendment Act passed Parliament. The accompanying rules were tabled on the 29th of August, following extensive public consultation, which included over 200 submissions from industry and stakeholders. Key changes include, obviously, the first one, expanding the AML CTF regulation to professional service providers, shifting the regime to an outcome-based framework, which makes requirements clearer and more adaptable, modernising obligations to reflect contemporary business practices, technology, and also responding to contemporary risks in the environment, strengthening Australia's compliance with international standards ahead of our upcoming global review. And I know that's going to be touched upon a little bit further. But in this regard, Australia will be subject to a review in this coming years, and certainly regulating professional services is an important area where Australia was previously non-compliant. And comparable jurisdictions such as the UK and New Zealand had already regulated these professions under their framework for a number of years. But for many of you here today, the obvious question is, what do these reforms actually mean for you? How will they change the way you work? The reforms certainly introduce a more targeted risk-based approach to customer due diligence. Firstly, initial customer due diligence now has two clear outcomes: establishing who the customer is and understanding the level of money laundering and terrorism financing risk that they present. In practice, this means forming a view of why the customer is using your service, what type of customer they are, how they're accessing your services, and any relevant geographical risks that are relevant. Importantly, the reforms recognise the realities of frontline work. There are circumstances where you may delay parts of the CDD process to avoid disrupting ordinary business, provided that the risk can be managed. Once a customer is onboarded, monitoring them doesn't stop. Ongoing customer due diligence means ensuring their behaviour continues to make sense in the context of what you know about that customer. This is where your judgment and your experience are essential. The reforms also clarify when you can use simplified customer due diligence when the customer presents a genuinely low risk. This reduces unnecessarily workload and frees you up to focus on those higher risk matters. Enhanced due diligence, which has been with us since 2006, we look at when risks are elevated, such as foreign politically exposed persons, unusual transactions, or any situation that triggers a suspicion. A key change is also how we treat those customers who were onboarded before the reforms, the pre-commencement customers. If their behaviour changes in a way that increases their risk, or if a suspicion arises, you must update their CDD. We are also updating the information required in suspicious matter reports and threshold transaction reports. So from the 1st of July through to the March 2029, existing businesses like yourselves will have the option of using the current SMR and threshold transaction reports, or transitioning to the new forms with the expanded reportable details. For operational staff, this means the information you collect at the front line identifies behavioural indicators, explanations of activity becomes even more critical. High quality reporting is one of the most powerful tools we have to detect serious crime. These reforms are ultimately designed to support you to make your decision making clearer, to reduce burden in low risk situations, and to give you the stronger tools where the risks are higher. Just in touching upon our priorities, AUSTRAC has been focused upon our 2025-26 regulatory priorities and on providing clear expectations for regulated business as we move into this reform period. The key message is simple. We are moving firmly towards a risk-based and outcome-focused regulatory model. This means we're looking beyond checklists and asking, are businesses genuinely managing the risks that matter? Are they preventing harm? You will see this reflected across the 3 priority areas that AUSTRAC has had a focus on this year. First and foremost, strengthening the suspicious matter reporting regime. SMRs are one of the most powerful tools we have to identify criminal activity. And when SMRs are missing or lacking key detail, we lose that vital information and intelligence that can help. So this year we have been engaging very closely with sectors where SMR reporting doesn't align with the level of risk, or where SMRs have not been reported to the extent that we actually consider that they should be in those sectors. Second is addressing the risks in digital currency or virtual assets. This is a rapidly evolving sector and criminals adapt quickly. Our cryptocurrency task force has continued to target areas where controls need to lift and identify issues that are impacting our community. You may see more cross-sector guidance and intelligence in relation to the risks in the space that intersect with the banking system. A third priority has been about improving the management of cash-related risks. So cash remains one of the highest risk channels identified in our national risk assessment. And that is despite the fact that Australia is obviously one of those countries that has an incredible take-up of online payments. We have leveraged our data and analytics to detect patterns of concern and have multiple targeted supervisory engagements where cash controls are a key part of a business's program. For frontline teams, this reinforces how important your judgment is in dealing with large or unusual cash. Across all 3 work, again, I'm going to emphasize your work is central. We'll continue to provide guidance and insight to help you. The shift isn't about more paperwork, it's about strengthening AML culture and focusing on effort. And to reinforce that, I just wanted to share a couple of examples. A bank noticed that the storage and warehousing being leased by a company didn't match the volume of furniture it was importing. It didn't have any plant or equipment, just one operating forklift. And the bank staff picked up that it didn't appear the staff on the books of this business ever took leave. So the bank, looking at this, has submitted a suspicious matter report on the company, which on the surface was a legitimate furniture company. but it was not. It was also found, upon police investigation, to be laundering large amounts of money. Now, none of those indicators on their own would have picked up or have been a concern that there was any criminal involvement, but together they raised that suspicion, and that suspicion led to a police investigation. In another example, a man entered a bank branch and wanted to make close to a $1 million deposit in cash. The bank teller had the foresight and the presence of mind to tell that man that they didn't have cash counting machine, but to return at 1 o'clock, a time when they could process this deposit. When that man left, the bank called the Fintel Alliance representative of that bank, who then called us. We called the federal police. And when that customer returned at 1 p.m, the federal police were there waiting. So that case and that instance of interdiction was able to identify a major international money laundering organisation operating across Australia and Northern Asia. Now, both AUSTRAC and the federal police had been tracking them, but this enabled them to question its members. And it was a great example of AML culture filtering through an entire organisation to the staff on the front line. Truly impressive that the staff member had the presence of mind to identify the risks and then, importantly, act knowing that there was support that would quickly be received. In closing, this will be a significant year for banks, a year of transition. It's about understanding how the reforms affect your day-to-day roles. AUSTRAC's going to continue to provide guidance, insights, and support throughout the transition. I encourage you to engage with AUSTRAC's materials and its expectations. Discuss impacts with your senior management, continue raising concerns and filing quality reports. Thank you again for joining the session. I'm now going to pass over to the Honourable Simon Birmingham, CEO, and to Katie Miller, the Deputy CEO of Regulation. Thank you both.
Well, thanks very much, Bradley, for that very thoughtful and detailed introduction. And can I welcome everybody who has joined us on this stream today, particularly to both the ABA and the COBA members who are joining in number across the operational areas of both ABA and COBA banks. You are the people who have to give real life to our AML CTF framework of the country, make sure it is implemented in accordance with the law, but also I know go above and beyond in trying to ensure it is implemented in accordance with the cultures of your organisations and the desire of all of us to make sure that these are effective protections for our country and that the right thing is happening across our financial systems and frameworks. Katie, thank you so much for taking the time to join us here in AUSTRAC's Melbourne offices today ahead of these significant reforms taking place. And just firstly, for those who don't know, a snippet about your role at AUSTRAC and how that relates to the big reforms that are underway.
Absolutely. Well, look, it is a pleasure to be here today and to be able to talk directly to you. As Brad said, staff on the front line are vital to protecting Australia from criminals who basically look to launder their money so they can enjoy the benefits of proceeds of crime and so they can fund further crimes. In terms of my role, so my name's Katie Miller, I'm the Deputy CEO for Regulation. In the regulatory function at AUSTRAC, I'm responsible for the regulatory function, but also our policy and legal functions. And through the policy function in particular, we've had a lot of engagement in recent months with both ABA and COBA, and really appreciate the input and insights that you provided to these reforms. In terms of our regulatory function, we're basically looking to do two things. One is to influence regulated businesses to improve their management of money laundering and terrorism financing risks. And we also support our intelligence function by promoting high quality reporting from regulated businesses. We use a range of tools to achieve that. And as Brad said, we have a firmly outcomes focused approach. We want to really be looking at, are we driving down the incidence of money laundering? Are we making it harder for people to launder money? And what that's about is it's about increasing the cost of money laundering. We want to make it harder and riskier for money launderers when they try and access services. so that one, they're deterred from doing it, and if they do try it on, they increase the risk that they're actually going to get caught. So we do that in a range of ways. We do it through education and guidance. We really want to set regulated businesses up for success. We also supervise whether the controls that businesses put in place are effective, and we provide feedback about how they can be strengthened. If we see risks that are uncontrolled, we will intervene, and that's when we use our enforcement powers.
Thanks, Cody. It's around 20 years since the last major changes to the AML regime. And you've touched a little bit on this, why are these changes now so important, both in terms of their importance to protecting the country, but also their importance to businesses working within the regime?
Sure. So I think there's probably two changes that are really important. So the first is that we are returning the Act, or government has returned the Act, to an outcomes focus. So when the legislation was first introduced in 2006, outcomes was what its focus was. But you know what it's like. Over the years, prescription can sort of build up and accumulate. So one of the most important parts of the reform is really trying to strip away all of that prescription and get back to what we're here to do, which is make it harder for criminals to launder money, and to do that by having really good having really good controls and systems to manage risks. The other significant change is that we're actually expanding the regime. So it will be expanded to what are called variously the tranche 2 sectors, or the gatekeeper sectors. So these are industries and professions that are recognised globally as being at higher risk of money laundering. It's things like lawyers, accountants, trust and company service providers, real estate agents, and it's about imposing the same obligations that have applied to financial institutions for the last 20 years, and saying that they too need to identify and manage the risk that their services will be abused by money launderers. So that's a really significant change. It's going to change our reporting population from about 19,000 regulated businesses to about 100,000. But these are really overdue changes. We're only one of 5 countries around the world that haven't regulated these businesses, so it's a good change.
Yeah, indeed. Of course, it does expand AUSTRAC's scope enormously in terms of the range of regulated entities and businesses, which I imagine is why in these reforms there really are the 2 tracks that have been developed. One is that expansion, the other is simplification. How intertwined are they? Is any more important than the other, or are they really necessary to gel together and to ensure that whether you are a big bank, a small bank, a big law firm, a small law firm, a big real estate agent, a small one, you're able to actually find pathways to meet these changes?
Yeah, no, they really are. They're both important. They are part of the package. I think one of the things that government recognised when it was looking at expanding the regime is that if you are going to regulate new businesses, you need to make the law as simple and as effective as possible. The best way to get people to meet obligations that are imposed on them is to make it really clear what's expected of them, and to make that as simple as possible. We know that if people are spending time just figuring out what does all this complex law mean, it means that they're not spending time and effort on actually managing the money laundering risks. So I think that to bring in all of these businesses, the majority of which will be small businesses, it was a really timely opportunity to simplify the Act, and of course that will benefit all regulated businesses.
And for banks who have been working with this regime for a long time, a shift from a very prescriptive framework back to an outcomes focus, what would your message be in terms of how those people, the operational staff on the front line, explain to the rest of their organisations about what is changing and what needs to change for them to be able to both effectively implement those changes and effectively realise the intended benefits of simplification?
I think that where frontline staff will see the biggest changes is around customer due diligence. So at the moment, you'll all be familiar with ACIP, Applicable Customer Identification Procedures, a great government acronym, which is, effectively know your customer. This is a great example of where we are moving from a very prescriptive obligation that focused on process to one that really focuses on outcome. And the outcomes that customer due diligence will be focusing on is knowing the identity of your customer. So who are they and how are they different to any other individual that you might deal with? And what's the nature of their business dealings with you? So why are they seeking designated services from you? And the focus of customer due diligence really is in understanding those as an outcome. There's a few places where there's a prescribed procedure, but that's really about trying to make it really clear of these are the things that you do to make sure that you know who your customer is. One of the other parts of customer due diligence that I think a lot of businesses will find really useful is we've introduced simplified customer due diligence, which is available for low risk customers.
Yep.
And the idea here is that it is a risk-based approach, and we want you putting more effort into the higher risk customers, and for the low risk customers, a simplified process will be sufficient.
And I'm sure that simplified process, if properly realised and implemented, will be very welcome for many, and again, particularly the types of frontline staff that Brad was talking about before, who want to have spending their time when they are thinking about upholding AML frameworks and obligations to be focusing on where the risk lies, not just on every customer who walks in through the door or who is looking to establish a new process with the bank. There's lots, of course, that has to happen all at once as new frameworks take place. At a practical level, in terms of the implementation process, we've been very grateful for the engagement, but how will AUSTRAC and how is AUSTRAC working with banks to ensure that is a practical and, as far as possible, a seamless implementation?
Absolutely. So one of the things that we recognised very early on is that the reforms are very welcome. We thank Parliament for them, but we did recognise that the time frame was ambitious, and that for businesses, particularly large, sophisticated businesses like financial institutions, you've got a lot of processes in place. A lot of them are embedded in technology. We recognise that 16 months was probably not going to be enough time to co-design a lot of the rules and actually give you enough time, or give your members enough time to change over processes. So we are we are a pragmatic regulator. We don't have the checkboard out. We're not sitting here waiting for tomorrow to roll along so we can come in and tell you everything that's not up to scratch. We're really looking at, as I said, outcomes. So the outcomes when tomorrow dawns and the legislation applies, where our message to banks is keep managing your money laundering risks. If you are already managing your money laundering risks, you should still be doing that tomorrow. At the same time, we've said to banks, you need to have a plan for how you will implement the changed obligations. So that's really what's your current state? What will your future state look like when you're meeting all of the revised obligations? And then what's your plan for implementing that? And I'm sure these sorts of plans are very familiar to banks. It's all about what will you do, when will you do it by, and who's responsible for making sure it gets done.
Look, that practical approach, I'm sure, is music to the ears of many. Banks are culturally, as a result of appropriate expectations placed on them, very, very well versed and determined to make sure they comply with legal obligations and frameworks and understand the risks and the penalties to them reputationally and financially where failures occur. So blending that practicality with that culture of compliance is important to get that message across. Looking at some of the tools that will be important for that in terms of AUSTRAC's evolving guidance and how that will roll out, the role of individual bank policies and procedure documentation. Are there any tips or thoughts that again, people on the operational front line should be taking away as to how they look to evolve that documentation and make sure that it's in line with your guidance?
Yeah. So when we've been speaking with the money laundering risk officers of banks, the thing that we've made really clear is, again, take an outcomes approach to this. The reason you have plans is so that everybody in the organisation understands what the plan is and what their role in it is. So to staff attending today, my strong encouragement is find out what your bank's implementation plan is and find out what your role within that is. For a lot of staff on frontline, it's really going to be about understanding when you're moving from the old to the new or the current to the new. Where that's going to be relevant is the time frame around when there's the changeover from AKIP to customer due diligence as the way of knowing your customer. There'll also be a change around the reporting. So with the suspicious matter reports and threshold transaction reports, the details that need to be reported have been expanded, but there is a transition period between now and 3 years' time. Banks do have the choice about when they will cut over to the new reports. So that's probably something else to have a look at, just to be clear about within your own institution, when is that happening?
And allowing that time and flexibility to be able to adjust to the new rules and to put in place those procedures, but also flexibility for those who can to move earlier, and in moving earlier, increase those standards further, but without the penalty of being held to account in that transition window, which is certainly welcome.
Yeah, absolutely. And, you know, I think that the sooner that we can have institutions moving over to the new standards, the better. You know, we do think they are simpler, more effective standards, so we do encourage that. And I think that with the implementation plans, the last two things I'll say is, one, we do expect to see that progress against them. There's no point developing a beautiful plan in 2026 and then not doing anything until 2029 and doing everything in a panic. But equally, we understand that plans change. They are predictions and intentions for what will happen in the future. We do expect that particularly the larger or more complex banks may need to sort of update and tweak those plans over the next 3 years.
We all wish that we could predict what was going to happen in the future and no risk that we have to manage, but indeed everybody is managing ever-changing and evolving risks, particularly at present. Banks, of course, intersect with all of the other entities who are now captured under the AML CTF regime. Anything you're looking for from banks in terms of their work with AUSTRAC, but also engagement with those other entities and how that can help to ensure compliance across the entire ecosystem?
So first, I would say we are not expecting banks to regulate the new entities. So we don't expect you to be asking for, you know, AML CTF programs and checking with whether they're crossing T's and dotting I's. That's our job.
Yep.
I think that there's probably two ways that immediately banks can be supporting, you know, these new newly regulated businesses. The first is talking to them about it. We know that awareness is the first critical hurdle to people actually meeting their obligations, is knowing that they're going to have these obligations. So we know that a number of banks already are reaching out to their customer cohorts that might be regulated and raising awareness about that. That's been fantastic. We really encourage you to keep doing that. Mm-hmm. And then the second is, you know, keep those suspicious matter reports coming through, particularly around the transactions that are going to be regulated. We want to be doing some work on these new sectors very early on, so we can be communicating back to the newly regulated businesses about this is what money laundering risks are looking like in your sector. So I think that'll be, you know, you'll have really good eyes on that. So just keep that intelligence coming in.
Thank you. I think that's very helpful advice. Financial crime, the boundaries of it, if there ever were boundaries, continue to blur and morph between one sphere of financial and economic crime and another. And so as you're embarking on these AML CTF reforms, equally banks are also dealing with a new scam prevention framework. And I just used your offices for a consultation session around how that is being designed to try to bring telco companies and digital platforms into a sphere of having some responsibility alongside banks for cracking down on scams. Again, that blurs into frauds as well. How do you see the overarching environment for tackling that financial crime and the role that your particular work at AUSTRAC and these reforms can play in potentially aligning with and helping tackle other parts of the financial crime landscape?
I think it's a really good observation to make about the financial crime landscape. And I think the thing that's important to remember is that organised criminals, they don't care how they make their money, they just want to make money.
Okay.
So they really are sort of almost multi-service, criminal organisations. They will use the profits of scams, to invest money into illicit tobacco, and then they'll use the proceeds of that to, fund drug trafficking. So we really can't be looking at this as a commodity level. We've really got to look at all of the sort of channels and really sort of put our focus on the criminals themselves. That means that we do work very closely with our colleagues across government in their respective efforts to tackle particular forms of crime. You mentioned the Scams Prevention Framework. We engage with Treasury regularly about how they are developing that framework and letting them know about the sorts of intelligence that we already receive, the sorts of obligations that banks already have to manage some of these risks. And we're confident that working together, we can really come up with something with the two systems that work together and leverage off each other. I think that's going to be more efficient. It's also more effective.
And I think we will see by necessity more of that over time as we look at that increased sophistication of what in some areas have long been sophisticated syndicates. In others, like scams, where we used to have a perspective of smaller, localised shonks and crooks in sort of common parlance, to now actually also being quite sophisticated global operators that will move from market to market. And the point you've made about ensuring that Australia is a cost prohibitive country in which to launder money or undertake scams or defraud people. It's a common objective across the board. Brad also mentioned the challenge of the role of cash in terms of how money laundering in particular is tackled. We find ourselves in a policy sense having to do more at one level to keep the right to use cash and the ability to access cash afloat as most consumers drive to digital-only operations. But at the same time, that huge use of cash in the black economy and the risks that it creates. Is there anything about new framework and changes that you think further helps to tackle in that regard, or more broadly around how banks think about cash? And Brad gave a great example there in the intro that we should be mindful of to ensure we're dealing with that part of the illicit crime industry.
I mean, look, cash remains a fundamental channel through which we transfer value in the economy. Lots of us do still use cash. I know it's declining, but most of us will carry around, 50 or 100 in case we're caught short, at the shops or anything. So I don't see cash disappearing. I wouldn't be surprised if the trends that we've seen over recent years continue and it becomes a smaller and smaller part of the market. But I don't know that it'll ever disappear entirely. The reality that we sort of balance that against is that it does still remain the favoured channel of money launderers. That's because it's accessible, it's accepted widely, and it's anonymous. So I think that will always, it'll always be a high risk channel for money laundering. I think that for banks, I think the important thing is just to understand how people are using cash. The more you can understand what is normal, legitimate economic activity with cash, the easier it is to detect the unusual, abnormal, which might then found suspicions that you send through to us. Let's face it, $1 million in cash. I don't know that many people have even seen that amount of cash in one place, let alone carried it into a bank. So I think the more that we can just sort of understand what's normal and what's abnormal, that's sort of how we can manage this risk.
Yeah, indeed. Looking at the reforms again, coming back to those, what's your key message to banks and to the people working on the front line as they seek to embark upon the brave new world of tomorrow and apply these reforms effectively?
So I think the key message is, even though the obligations under the legislation are changing, the role of frontline staff in managing money laundering risk does not change. Staff at the front line, you really are critical in Australia's defence against organised criminals. So we want you to keep doing what you're already doing. You know, ask the questions, ask for more information if you're not satisfied, seek help internally if you're dealing with a customer that you think just isn't quite right, isn't sort of presenting normal sort of economic activity, and know that you're supported in doing that. You will all have your second line defence internally within the bank that support you to do that. AUSTRAC is supporting you with education and guidance, so really encourage staff to have a look at our website, have a look at the summaries we've got about what's changing. We've got, you know, webinars and e-learning products. You don't have to wait for your own institution to be training you. I mean, we expect that they will be training you in due course, but you don't have to wait for that. You know, get online and check out our products and sort of just become more aware of what money laundering looks like in the financial sector. And the sorts of controls, the sorts of things that you can do. And a lot of it is as simple as ask questions, ask for more information if you're not satisfied, and if something doesn't ring true, escalate it internally.
And without necessarily naming anybody, but are there standout steps that you've seen to date that give you confidence in terms of things that are happening and are being done that you would highlight for others to go away and consider and look at as to how the reforms are implemented?
In terms of implementing the reforms, I would say that the standout are people who have their implementation plans in place. Because if you've got your implementation plan in place, it means that you've got a clear plan. Tomorrow, you can just be managing your money laundering risk while methodically working through that transition. You know, the other thing I would say is just, you know, stay aware, keep exercising your judgment. If things don't feel right, escalate it.
Yeah. And from an AUSTRAC perspective, these are big changes. Any lessons you've taken on board on the way through that you know, help as to how AUSTRAC thinks about achieving that purpose that I know you can hear in your language. I know from my meetings with Brendan, your CEO, you know, his language, his public direction, and that of the government about that outcomes focus and how that is really achieved.
We've learned so much through this process, and what's interesting is that yes, it's a change to the legislation, but I think it's informing a lot of changes in how we approach our regulatory and our intelligence functions as well. Some of the key points, I think, are about the value of that industry engagement and really understanding what the business realities are of both current businesses and new businesses. That has really informed how we've sort of set out the rules and what the obligations will actually be. So I think that's been quite critical. I think the other piece around outcomes is that idea of ultimately what we're here to do is to try and stop harm to the Australian community. And that outcomes focus of saying, yes, there's lots of obligations. The reality is that some will be more influential than others. And our focus is firmly on what is going to make it harder, more expensive and riskier for organised criminals to launder money.
I think it's a very important, powerful message at the end there. There's been obviously an immense amount of work that's gone into this by AUSTRAC, elsewhere across government, across other industry sectors, not just the banking industry and the banks who are online today, but of course those others who are having to step up for the first time. What will be the measures of success in 3 or 4 years' time? How will you look back and think, I guess, well, that was worth it?
Yeah, I mean, I think ultimately we want to see less dirty money being used by criminals. I think that if we can sort of see a reduction in the amount of money that criminals are able to launder, which means, you know, they're not able to enjoy the proceeds as much, they're not able to invest it into new crimes. That's ultimately what we want. What that looks like, it means that, you know, you've got less money actually being laundered through organisations, and if they do try it on, that it's easier to detect them. It's easier for law enforcement to go and find them and charge them and prosecute them. In terms of getting some measures around that, that's where our focus will now sort of move to, of how do you actually measure some of this stuff? Because remember, money laundering is all about hiding money in plain sight. So we will now work on what are the sorts of metrics that we should be looking at. We think that suspicious matter reporting rates, that will continue to be important. We're also looking at whether something around enhanced customer due diligence, which is the form of due diligence applied to those really high risk customers, whether there might be some metrics around that as well.
Okay, thank you. Thank you very much for your time and insights today, and indeed to all of the AUSTRAC team, your leadership team, yourself and Brendan and the rest of the team, all of those who have engaged in the policy, in the implementation. There's journey still to be had, but I know that we are very grateful for the way in which that's been undertaken, and that across my members and our team and those in COBRA as well, they've appreciated the very cooperative approach that AUSTRAC has brought to bear on this. It is always worth remembering the purpose and the mission underpinning this to stop harm, as you said, those engaged in money laundering, let alone those involved in terrorism financing. They, of course, are causing immense harm in different ways, the targeting of the vulnerable, the undertaking of actions that cause great suffering in many parts of the country. And so I'd also like to point out, of course, the shifting of the tax burden onto those in the legitimate economy as those who operate outside of it avoid such obligations, which has a very personal impact on everybody on this call, as well as right around the country. We're proud to have been able to partner, and we do really welcome that collaboration to our members, the COBRA members here. Thank you again for your work. You can also hear there is a very open invitation from AUSTRAC to make sure that you continue that direct engagement with their team, and to make sure that your implementation plans are tracking in the right direction, to get questions answered, to help communicate through to all of your frontline staff and management teams to ensure that we get this right, not just tomorrow, but over those next few years of that journey. So thank you again, and I think I'm throwing back to you, Brad, to finish us off.
No, thank you both very much for covering such a range of questions and responses, and providing such insight and thought to the whole sector. So I didn't have too much to say to close off. Again, I want to thank everyone who joined the session today. I want to thank you both on behalf of your own members, but also for the broader community of Australia for the contribution that is being made. So thank you very much for all joining today.
Thank you.